Hi, Finance and Coffee, and welcome to this Friday wrap edition, but it's not really a Friday wrap. I've got, obviously, the awesome Sam White on the line with us. Now, it's a very opportunity, so thank you so much for basically a short notice to become free to chat to the community. You've got a huge announcement, I believe.
Yeah, Deanne, look, thanks for the opportunity, and good morning, everyone on the stream. Look, yeah, yesterday we announced that we are moving our aggregation brand into LMG. So as part of that, we're retiring the Plan, Choice, and Fast brands and consolidating under one group, LMG. We see that it brings real clarity to our company that instead of operating under Plan, Choice, Fast, PCF, Loan Market, we now have a really clear positioning as an aggregator. Loan Market remains a brokerage brand, a franchise brand, a consumer brand in the marketplace, but LMG becomes the name of our aggregator and defines us as such.
Yeah, I have to say that I wasn't actually surprised, to be honest. I was just sort of waiting for you guys to actually do it. But that said, there will be a few questions and so forth with regards to it. And I thought, would you be able to address that, because there could be,
Look, it's nearly 2 years in the making, this decision, and in talking to a lot of our members, they said, look, make this quicker, go faster. Some obviously are concerned. They're proud of the brands they've had. And if I can just talk probably to two issues that I struggled with in making this decision. And the first one was really the emotional attachment that people have to the group that they're part of. And I started Loan Market 29 years ago. I'm aware of how important those communities are. And as I spoke to a lot of brokers, and I had a lot of sessions with Plan, Choice, and Fast brokers, had a lot of sessions with Loan Market brokers, really trying to understand that. And when I spoke to a lot of them, they were proud of the communities they created. They were proud of the people they were part of. They didn't so much mind what the name of the aggregator was, because obviously the aggregator is not important in their relationships with their customers. But what they did really value was these communities. And that's one thing that took me some time to make this decision, was how do we deliver that still, those communities under this structure? And that's been where a lot of the thinking's gone. And what this change enables us to do is to give real clarity to our brokers around different service plans that we can offer. So as part of this change, no broker is going to be asked to change any of their commercial arrangements. They have to change any of their accreditation numbers. They have to change any of their ACL or credit rep numbers. There is no change to a broker that they need to do as a consequence of this decision. What it does do, though, is it enables me to sort of start to say, well, based on what a broker wants, we can now deliver really clear services, not just different remuneration or fee card plans or commission splits, but clearly defined value plans for our brokers. And that's going to depend on what our brokers want. Now, we haven't had a chance to go through that with our agreement holders, and we'll be doing that in the coming weeks. And we've got PD days where we'll be coming up in March. We'll be talking to our agreement holders in agreement holder only sessions about that. But the concept of being able to define those plans and then create communities around that. We've been looking at, and in recognition of that connection that people have, we've been producing some video documentaries of the history of Plan, Choice, and Fast and Loan Market. We want to celebrate that legacy. We want to celebrate the contribution that so many brokers have made over the course of 30 years to get us to this industry point where we are now 70%. That hasn't just happened. That's come about because of what brokers have done over 30 years since the start of this industry. And we want to also then bring in all those life members, all those Hall of Famers, all those into be foundation members of something that we can go forwards with together and start to create a new set of families, a new set of communities within the group. And so we respect legacy, we respect the history, we respect what's happened and what people have done to get us to this point. But equally, we now want to start to build the future of those communities moving forwards. And I saw, even last year we had our first LMG commercial conference, and we've invested in creating a commercial aggregation group. focused purely on the commercial space. We had members there from across the spectrum of aggregation groups that we have, from Plan, Choice, Fast, Loan Market, BYB, and it was just terrific to see talented people with a common passion, a common set of interests get together and start to talk about that. And to me, it showed the power that let's not limit our value delivery just to siloed brands. We need to open it up to everyone in the group and start to offer them more value from what we can do together by having it a more open and collaborative and united community of brokers.
All right. Thank you for that. Now, just back on the theme of keeping the continuity. Damn it, sorry, I said that wrong. Yeah, that one. So there is a few chat with regards to some members of PFC with regards to the CRM. The CRM is obviously now being basically rolled out to the entire group now. Now, part of the legacy, obviously, on the other side is that there was no fees on that side. So that's something that will be asked of as well.
Sure. So when we made the decision, it was one of the first decisions we made back in 2021 to move the group to one platform. Before we did that, we said to everyone, look, this is going to be the fee structure for my CRM. And this is the platform we move towards. My CRM is a lot more than just a CRM. It contains a whole series of plugins that a number of brokers use. Things like there's email programs, there's file invite, there's a whole lot of integrated technology, integrated applications that come with that, and that are third-party apps that we pay for to our brokers. So we made that announcement before we shifted and made sure that all our members knew that was going to happen before we made the call. One thing on technology, just I think it's important to remember, is that it's going to keep evolving. We need to have an ability to keep investing in tech. We've got open banking coming around the corner. InfoSec, information security, is obviously a massive issue facing all of us. We need to invest more in our platform, and we need to have it viable. And one of my concerns is that if there's a race to the bottom on aggregation fees, then really all that happens is that brokers get less from their aggregator. Now, we want to have different plans where brokers can decide, well, I don't want the bells and whistles on everything else. I want to just have my core aggregation service delivered really well, and through to, I want more business support, and I want more ability to help with process and recruitment of staff and training of staff and Kaizen and a whole lot of other things. So we want to have a range of plans for our brokers. But with technology, if we don't have an ability to fund it, then we don't have the ability to develop it. And that's a reality. And so what our structures enable us to do now is to invest more in, for example, how we integrate commercial into a platform, so that brokers, whether they're dealing with commercial, resi, or asset in particular, is going to be a key thing. How we adapt to open banking and the new ability for us to be able to deal with lenders and get better broker outcomes from quicker decisions. And then, of course, how we make sure that all that data, all your customer data, is properly protected and secure. That all takes investment. And that's one of the reasons why we knew when we started this journey that we needed to have a revenue line to put against it, so it enabled us to keep investing more rather than looking back at what we've got to cut to fit within a cap.
Yeah, that's awesome. Just as you were talking, there was a comment in the chat there for a suggestion to integrate quickly as well, and then they'll be perfect.
And on that, one of the things we do want to do is make sure it's an open platform, so then more integrations can happen. And a lot of that's been trying to open up our platform to third-party apps. That's definitely the ambition, and one of the things that we will be doing this year is, you'll see more on that. I won't talk particularly about individual applications, but we do understand how popular some of these applications are, and what we want to do is make them easier for our brokers to be able to use and have them fully integrated into a system, rather than having to double enter, get out of one platform, go to another, and all the frustration that comes with that. So being able to access everything in one spot, whether it's in my CRM, whether it's an API sort of application that we can tie in, is an important part of our strategy.
Awesome. Now, just before I move on to my other questions about sort of news and so forth, which is sort of affecting our industry for this week, is there anything else you'd like to address?
The only thing, it'd been appropriate for me just not to acknowledge the massive contribution that Stephen Moyes made to our company. Steve was a big part of trying to make this happen, big part of the planning process. And and as we were going through it, one of the things I asked all of our key execs is like, I need a commitment that this change we're going to go through together. I need you on for the next at least 3 years. And to Stephen's credit, he sort of thought about it over Christmas and made the decision that there are other things he wanted to pursue, other things he wanted to look at. And so that is a significant change. I know that's a significant impact on some of our members. And on behalf of all of us at LMG, I just want to acknowledge what Stephen's done. Taking 3 aggregators, putting them together, taking them outside of NAB, lifting out all the tech from NAB, which was a massive issue, and dealing with all that, pulling the group together. Stephen did a great job with that, and I just want to acknowledge the role he played and to wish him all the best with his future. So awesome. Apart from that, I just thought that was an important thing just to acknowledge that I didn't get a chance to do before.
No, absolutely. I mean, the tech stack, just transferring that would just be a complete nightmare. But good job.
775,000 trail payments a month that came out of 3 different systems. There was 10 million lines of code that we had to pull out of 3 different systems out of NAB. It was a huge, huge job. And got a call from Ross McEwen. We finished lifting out late last year. I got a call from Ross mid-January. He just said, mate, we didn't think you could do it. And congratulations to your team. So, it's been a lot of work. I know that our brokers have been through a lot of change to do that. And it was a big effort. And I just want to thank all of our members and all of our teams for the hard work they did in doing that.
Yeah, that's awesome. Okay, so going to the news for this week. Obviously, we had the rate movement. Now, I think given the fact that you now are the biggest aggregator across the ditch as well, basically New Zealand and Australia, you actually have an insight into both industries, right? Both markets, right? So there's chatter about mortgage rate cliff and so forth. That's bad in Australia. I think it's equally, if not more, worse in NZ. So have you got sort of your thoughts in terms of what's going to happen? Because obviously the rate's still going to go up, but what's the challenges, or actually, to be honest, what's the opportunities for the brokers that you can see?
So first of all, lots of experts telling us what's going to happen, and just a reminder that all the experts told us that during COVID the world was going to come to an end, property prices were going to drop off a cliff, yada yada yada. I just think we need to take all that. Yeah, that's out of our control. What happens to rates? And I don't know what will happen, how far they'll go. But it's obvious we're obviously a lot closer to the end of the cycle than we are at the beginning. How much closer? Yeah, 1, 2 more. I don't know. And to be honest, I don't think anyone really does. They're all speculations. In New Zealand, it's been tougher. Rates moved earlier. They've moved higher. There's less cushioning in the market. And so brokers have found it challenging over there, and they've found challenging volumes. What has happened though is that everyone needs an advisor. Everyone now, every mortgage broker, every client needs a mortgage broker more than ever. So I think one of the opportunities coming out of this difficult time that everyone's going through is that the value that a broker brings a customer is more clearly defined than ever. And I think we'll see mortgage broker share rise on the back of that. So firstly, that I think will happen, and that will be an ongoing shift that will occur post whatever happens with rates in the short term. I think the other thing is just the importance of our communication with existing clients, and that's one of the things I've noticed really clearly, both here in Australia and in New Zealand, is that backbook communication has become just such a critical part of revenue generation, and no longer is it optional to say, well, I'll just email. It's the communication and the relationships that are formed that are so critical. The other thing I think is so important is making sure that we're seeing net promoter scores for clients on their broker being at record highs. despite all the frustration and challenges that have happened, clients trust their brokers more than ever. And what that does now is create opportunities to look at diversification. And I know that what we've seen in the last 6 months around particularly asset finance, referrals into commercial specialists, or deciding to say, look, I'm going to put a commercial specialist in my business. That diversification into a broad-based brokerage is happening more and more. And I think there's if we stay in touch with customers, if you keep talking to customers, the funny thing is good things happen and new opportunities get created. And so whilst we're seeing conversion rates drop, we're seeing inquiries still be pretty strong. Conversion rates are dropping, and the important thing on that is making sure that if there are other needs those customers have, brokers can service them. And so we're seeing a real growth in, personal loans, in asset finance, and in commercial, off the back of really strong engagement from residential brokers on their books. And there's some terrific commercial specialists out there. They've got great ability to help your broker customers, or their brokers who are diversifying into that space. And I think that's going to be one of the features. We've talked about it for a long time. I think this is now real reality.
Yeah, I think if you've been on the group, that's why I'm addressing the group here. If you've been in the group long enough, you probably would have noticed that I've said it before, where broker market share now is about 70%, right? So that's on the residential side, whereas on the non-consumer side, it's sub 20. So it's that's where the opportunity is. So just have a look at that.
And that's why we've created an asset finance aggregation business and a commercial business working together with residential. So 3 real specialities. When we first came together as a group, and I know there was some confusion as to what are we doing. When we first came together, we had about 300 staff across Plan Choice, Fast, and Loan Market. We've now got 400. We'll have more staff in 3 months' time than we do today, given some of the new roles that we've announced and some of the new positions we're putting in. So we believe we want to invest more in both broker and also in the ability to diversify those. And what we're looking for is more ability, part of this change for our teams, for our staff, to really be more specialised, so they can go deeper with brokers and in that process add more value.
That sort of also puts to bed sort of any questions that says that you guys are cost-cutting, right? So your headcount's gone up.
Yeah, and I think it's a natural thing when financial services companies come together. The headline is, well, how much cost are you going to take out? We put cost in. We've got more resources, almost by a third, than we did when we first came together back in nearly 2 years ago now. And we will have more going forward. So it's not about, but it's about the specialisation and about the depth of those skills. And so a big part of this change too, and one of the reasons why we're delaying the implementation until 1 July is we want people to become, our teams to become more specialised, to be qualified, for example, in our Six Sigma across the board, so that we can be more effective and valued part of a broker's sort of support system. And that's a thing we've done and what we'll continue to do going forwards.
That's awesome. Okay, so moving on.
I've been in business 29 years. Sort of there, I was a broker when it started. I'm more confident about the broker industry now. We've got some challenges to lean into, no doubt. We've got some issues with how the remuneration system's designed. We've got some issues around some new changes coming through in technology that's going to present new opportunities. But I've never been more excited about where the brokers can go. In the UK, they're at 84% market share. We're at 70. There's a lot more upside still to go. And the reason that happens is because customers have seen so much value in brokers and will continue to do so the better we get. Absolutely.
Okay, just moving on. So there is another issue that sort of made the headlines this week, and it's regards to the NZ payroll issue, right? You guys, I believe, have actually been investing and fighting it for a long time now. It's not a recent thing.
Yeah, so revenue. There's an interesting article in the Advisor today, which I thought John Donovan did a really good job summarising. at the heart of the matter, the banks think, the Revenue New South Wales believes that brokers are relevant contracts with an aggregator. So that basically means that brokers supply service to an aggregator who supplies services to a bank. And that's the way that Revenue New South Wales views it. We view it that brokers are our customers, that our job is to provide services to customers, and that banks engage brokers, aggregators, to help provide those services to the broking community. That the money that the banks pay, the commissions, are not to the aggregator. They're really commissions paid to the broker, and that's the fundamental difference. So what that boils down to is that Revenue New South Wales believe that unless a business employs or engages a staff member in their business, then that the payments that are made from the bank to the broker should take a payroll tax, 5.5% from that payment. Now, in many cases, that's more than the aggregator actually charges the broker. So it makes a mockery of the whole system. So we think it's fundamentally wrong. We think the approach they've taken is wrong, and so we are going to court with Revenue New South Wales to fight that issue, because we just think it's a complete. To have the government impose a 5.5% tax on broker commissions from lenders is totally wrong.
Yeah, because I think the fear would be that one state takes that as precedent, and then it gets sort of spread nationally. The other thing that I'll probably just ask you that, because it's not just if they view an aggregator like that, they'd also view a smaller brokerage group similar in the same means, wouldn't they?
Yeah, they've taken the view on everybody. So it would be aggregators, and sort of regardless of the business model, whether it's pass through or percentage models or transaction fees, whether it's aggregators or what defined as sub-aggregators in the market, whether it's large brokerages that engage staff. So look, it's a significant issue. I think it's one of those classic cases, a bit like we had when Commissioner Hayne misunderstood, I believe, our industry and what the value that brokers bring to customers. I think this is the same issue where there's a misunderstanding of how it works, and unfortunately, after we've tried to explain and work things through, unfortunately, the only way to get clarity on this issue is to litigate it.
Yep. Well, good luck on that, and I hope you guys would keep us updated on that as well.
Yeah,
and,
we've been delighted by the support we've received from the broader broking community and aggregation community and industry bodies, and we need to put our best foot forwards for all of us, because I think having government take a big chunk out of what flows from the banks to brokers is just more pressure, puts more pressure on everybody, which just is crazy given everything we're going through at the moment with the net of offsets, the clawbacks, the lender referral programs that we're very much against, and they're the things that we need to be advocating for. And one of the things of coming together as LMG is it gives us really a clearer voice, I think, to speak to those matters, and I think stronger position on being able to represent the interests of our joint community, this fantastic industry we're all part of.
Yeah. Well, mate, thank you so much for your time, because I know you're a very busy day, especially today with the announcement and all that. But
thanks. Yeah, good to see you again, mate.
Yeah, absolutely. Let's catch up again.
Thank you.
Thank you.